Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you guys. It is June 15th. Hope you guys got some great upcoming plans for the weekend here. Hey, we do got some economic news to go over today, so let's kind of jump into it. We got the Empire State Index, which is manufacturing in the New York region for the month of June. So as you can see here, we had a pretty good number for the month of May at 20.1, and it jumped all the way up to 25, which is obviously a very good number here. We also got industrial production for the month of May. So in April, we had a really good month at 0.9 increase, and it was supposed to go up. It was supposed to simmer down a little bit in May to 0.1% increase. Instead, it dropped by 0.1%. So a little bit disappointed there. Same thing with capacity utilization for the month of May. In April, it was at 78.1, and forecast it was supposed to be 77.9, and it did dip a little bit down to 77.9 in the month of May. However, this is good news here, and that is the consumer sentiment for the month of June. So we had a 98, which has been a very good number in the month of May. Forecast was supposed to go up to 98.5, and it jumped even further to 99.3. So overall, good day here. Industrial production capacity utilization aren't like high impact data that's going to impact the markets. Empire State Index and Consumer Sentiment, however, will have a higher impact on the markets. So those two are did very well today here. So why is the stock market down? It's kind of disregarding that, even though we had good information, because it was basically announced today that we are implementing the tariffs on about $50 billion worth of Chinese goods coming in. That is effective today. And China basically said that they're going to retaliate, and basically U.S. said if they retaliate, we're going to retaliate further. So basically this is escalating into a trade war with China, basically. So obviously both sides feel they're in the right, and until we get that resolved, the markets aren't liking it very well here. Because so so the stock market is way down today. Dow's down over 250 so far this morning. We knew this was a possibility coming up, and it looks like it's kind of reaching that point where we will. How long it lasts, we don't know for sure. So, but until then, it looks like we're going through with it. So let's kind of move forward, see how this is affecting the bond market and rates. So yesterday we broke above the 25-day moving average, which is good news for bonds, which puts us in a better position for better interest rates. And then today we're pushing up against the 50-day moving average, which we are so far being held up. So earlier today we were up about 13 basis points. We pulled back. Right now we're up 5 basis points. We're down for the day, but we are up from yesterday about 5 basis points. We are getting better pricing so far today. A lot of lenders didn't give us a little better pricing. We had a nice little spike late in the day yesterday, and a lot of lenders didn't price for the better. So they're giving us not only that, and then combined with today's better pricing, they're getting. So you'll see most lenders come out with a better pricing today versus what you saw yesterday. And so we'll have to kind of wait and see if we can break above this 50-day moving average, which is a good possibility, because if you look at here, the yields broke below it. So as you see, the 50-day moving average, which was a floor support, it was kind of supporting it, and it broke down today. So far today, we're down. Right now, we're about 2.91, and we're fast approaching this 100-day moving average here. That's been a pretty strong support, but this could help out mortgage-backed securities and bring that up. So if the mortgage-backed securities are rising up, that means interest rates are coming down. So if you see it reach about a peak where we were, if we can get lucky, get up this range, you might want to lock in, because again, we're reaching end of the quarter here, or actually not end of the quarter, we're reaching July, which is end of the quarter. So you'll start the third quarter, and then the Fed's going to be making more acquisitions or more changes towards their mortgage-backed security purchases, so that we could see a bump in the interest rates and long-term rates coming in July. So you may want to lock in before we reach the July period here. All right, so that pretty much wraps it up for the day. But if you guys want to get, come over to Twitter, follow me at Mike Bjork, and get all the data that comes out throughout the day. If anything pops up, I do put it out there on Twitter. Otherwise, I hope you guys have a great rest of your weekend, rest of your day, and I will look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.